Welcome back to Economy and Markets Fortnightly. During this first fortnight of July 2019, key economic indicators like CPI, WPI, dollar price, and GSEC rate remained positive, while consumer price index for the month of June 2019 was slightly high at 3.18%, but is still well within the comfort level of 4%. Wholesale price index on other hand touched almost lowest point in the last 2 years at 2.02%. As per RBI data, Forex reserves of India touched the all-time high figure of 429.91 US billion dollars in the last week. In spite of all these positive economic indicators, Nifty fell by 1.7% during fortnight and Nifty Midcap 50 fell by a massive 3.67% during the fortnight. That's why markets are called unpredictable and complex. Let us have a look at other factors under which the positive economic indicators got suppressed. First is high price earning valuation of market as indicated in our first fortnight of June video. And to sustain these higher level of valuation, market was expecting some big ticket reforms to boost investments in the budget. The budget which was presented on July 5th was more like a blueprint towards 5 trillion US dollars economy. Market got negatively impacted because of the some announcements in budget and also due to some of the external factors. In the budget, massive increase in surcharge for super HNI category was increased from existing 15% to huge 37%. And for those in the income range of 2 to 5 crore, surcharge was increased from 15% to 25%. This has resulted in the maximum tax effective rate for super HNI category at huge 43%, which was previously at 36%. Now this category of investor whose money used to come by way of investment, that has got negatively impacted liquidity wise and sentiment wise as well. Not only this, even foreign portfolio investors, as they are not registered as companies in India, they are getting impacted because of this huge surcharge, which is taking effective tax rate to 43%. This has resulted foreign portfolio investors becoming net sellers post budget. Budget also increased the minimum public shareholding percentage for listed companies from existing 25% to 35% level. Again, this is not a bad, but the immediate consequences of this are creating problems in market. Though the time frame for implementation of this reduction in shareholding pattern is not yet finalized, but the ultimate impact of this change will come in two forms. One, promoters may increase their holding to 90% and delist their company from stock exchanges. In that case, some selling from public and institution may come. In a second option, promoters will have to dilute their holding by selling their considerable stake in the market, which is going to create selling pressure in the market. So in both the scenarios, though positive from long-term point of view, but in the immediate future, in the process of implementation of this change, some weakness is likely to be witnessed. Ultimate impact of increase of public shareholding from 25% to 35% is going to increase free float in the market, that is good for investors and also for institutions like mutual funds. Those who are struggling to invest in mid-cap category when the size of fund increases, that is mainly because of promoters are holding very high percentage shareholding in mid-cap companies. Another negative factor for the market, crude oil price has jumped to 66.90 US dollars per barrel from $62 per barrel a month ago. In our economy and markets June 1st fortnight, we have indicated concerns about oil price. Also, in economy and markets June 2nd video, we have shown the weakness in dollar in technical charts. Dollar has remained in a weak zone since then, and even as of today, as per technical charts, dollar is in weak zone at rupees 68.52. Earlier, IMF had reduced the world economic growth forecast to 3.5% for 2019. After this bit negative news, China announced its second quarter GDP figures at 6.2%, which is the slowest pace of growth in last 27 years, which is mainly because of the trade war with United States. Another disturbing factor for the market, Deutsche Bank announced 18,000 job cuts. This news is being seen in connection with the anticipated slowdown in the world economic growth, which is again certified by the China's economic data. After Nirav Modi's case, Punjab National Bank has announced yet another fraud of 3,800 crore rupees in Bhushan Power and Steel Company, another negative factor for the market. In the regulatory changes, India in its push towards moving to digital money is moving towards free fund transfer under NEFT and IMPS. State Bank of India has already announced this. Also, from 5th of August, Reserve Bank of India has allowed retail trading in forex markets. That's all for this fortnight. Thanks for watching.